I was reading a good report on the weekend about what is not priced into markets at this stage. And while we've had a market sell-off, there are still concerns whether we are priced accurately for recession. The other big one, which surprised me, was a European debt crisis, that there are growing fears around this anti-fragmentation tool that the ECB is working on and whether it's going to be up to the task. Are you concerned about a debt crisis in Europe?
Definitely. We believe this is, I wouldn't say a debt crisis, but we do believe that there are apparent, glaring at this point, cracks in the wall among peripherals. You guys mentioned some time ago that, some important measures of strength coming from the core of Europe, for example, German exports, they continue to show weakness. And this is all happening in a time where the ECB is preparing to tighten financial conditions further. So, lower growth, tighter financial conditions, that doesn't spell healthy conditions to the Italys of the world, to the Spains of the world, that they are already struggling quite a lot with, the inflation hit or the energy hit. So we continue to believe that this is a scenario where Europe versus the US will probably be hit a lot harder on a relative value basis.
Lewis, what does that mean for rates in Europe? Because we had marched higher with treasuries. We were very much anchored to the US trade for a while, but now we seem to have reversed course as well. And the stateside trade treasuries came off last week. Do you think that there's a downside risk then when it comes to European rates?
Yeah, you mentioned, something very interesting a minute ago. I mean, what is priced in? We do believe that the markets are smelling the coffee. The markets understand that we are indeed heading towards an environment, especially in Europe, where output generation will slow down. Look at the PMIs. We are probably going to see much lower PMIs over the next quarter or so, unless you have a miracle from China. What is not exactly priced in or accurately priced in is the lift-off coming from the ECB. The markets are starting, or as of the last week, the markets started to explore this 1 year, this 2023 going into 2024 interest rate path coming from the ECB. We believe it's going to be extremely difficult for the ECB to keep on going as we go into the next year.